Good day, everyone. Welcome to today's live stream. Okay, so for those who do not know, today's live stream is all about using my liquidity map. So right now, price is at my liquidity A zone to the upside. What I'm looking for is price to turn to come to the downside. Okay, so this liquidity A zone is an area where the price will be expected to be rejected, pushed back to the downside. All right, so I'm looking for an indication that tells me that price is going to stop here and reverse to the downside. So far, let me see here. We have this aggressive move to the upside. And what I'm going to look for is some sort of liquidity grab type scenario, right? I want the price to break this trend line, come back, maybe bounce off this one, and then eventually break this trend line to the downside, okay? Because the first break to the downside might just be a pullback. So it pulls back in just like this, pull back, see it breaks that, pulls back, breaks this, pulls back, and then move up. So let's see if that's what happens here. If it breaks down, pulls back, and then break down again. So the second break is what I want to see. I'm looking for the second break. So I'm just going to be waiting patiently. All right, looking like we're getting that first break. So we're getting that pullback. What I want to see is that second break. I want to see price pull back, bounce, then break. So that second break is what I'm looking for to go short. Price is kind of moving slow today. Though this bar to the upside is kind of very bullish on the 1 hour time frame. Very bullish on the 1 hour time frame. Let's see how it plays out. Since that 1 hour time frame is so bullish, I'm going to have to try to protect my entries very soon. On the close of the 1 hour bar, you will typically get a pullback. Price will typically pull back. Maybe 50%, maybe 61.8% or so. You should see some sort of pullback, 38% or so. You should see some sort of pullback happening on the close of that bar. Sometimes it's not going to be a very deep pullback. Sometimes it can be very small and continue going up. That means that there is a lot of volatility to the upside. All right, so we got that break. So I'm just going to keep looking for the next break. So this could break here, pull back, get to zone B. If it gets to zone B, I'm going to look for a new break, then pull back, then the second break again. So every time price hits this zone, I'm going to draw a fresh trend line to that zone. Just adjust this trend line. What I want to see is price come down, bounce, break. Let me see this. This one actually looks like the break I need to be looking for. I'm looking for the early break. So this is break. This is going to be the second break that I'm looking for if price does not get to zone B. My initial stop needs to go above the high when I get my entry. So I can't just jump into the trade in a very wild way. I need to wait for an ideal setup. So the idea behind the break and retest is a liquidity grab. In a lot of cases, they're going to try to grab some liquidity before they go. So I'm looking for that type of liquidity grab type setup. These are the zones where they grab liquidity and move away from the zone. So if they're going to not grab liquidity around these levels, they're going to still continue pushing up to the next level, where there may be more liquidity at that level. So guys, ideally this account started off at $500. I found myself without using the double break type setup, getting caught up where the price just kept moving up, down, up, down, up, down, up, down before it went, and that caused me to, give up, take on some drawdown. So I'm trying to recover that by getting my entries together, making sure that I take the highest probability entries. So I'm using the double break type approach, so that I don't get that, you see where it breaks and I sell and then it comes back, stops me out. I'm trying to eliminate that type of situation. And generally the first double break that you get is the best. So price is still pushing up. What are we looking at on this 1 hour? Looks like a very strong kind of looks like a very strong resistance level. Is the price wanting to go above that, or is it going to turn back to the downside from here? So we are at this liquidity level. So I'm going to look to see if the price is going to turn back from this level. So push up, break this. I'm going to try to sell that. Stop above. Providing that we don't get to zone B. If I get to zone B, then I'm going to have to recalculate my entry. Okay, but I'll be looking for an entry to go short at zone B. I need to make sure I catch my entry at the right time because I don't want to walk away and then I come back and the price is too far away for me to get the ideal entry and place to put my stop. I also would like to, if price continues breaking down, I want to be able to move my stop into profit slightly to just protect the entries. Just waiting patiently, guys. Waiting patiently for my entry. All right, so they're grabbing the liquidity for those who tried to sell around this level, grabbing that liquidity. So they pushed up. Let's see. Come back and break this level. I'm going to look to go short. If they get to this level, then I'm going to recalculate my double break entry. And I'm going to look for the shorts around this level. Remember, guys, trading is risky. Never risk more than you can afford to lose. Everything I do here is for educational purposes. I am not a financial advisor. Still very bullish on the 1 hour time frame. We got like 10 minutes left on that 1 hour bar. Price still pushing up. Price still pushing up. Looks like we're going for that B zone. All right, price is heading up to that B zone. Almost there. Once price hits that B zone, I'm going to put in my trend line for that B zone for the first break. We're looking for our entry around the B zone, or if price pulls back right now and break this trend line to the upside without hitting the B zone, then we're going to look for a sell. All right, so the B zone looks like it's officially hit. So I'm going to adjust. This is going to be my first break. Actually, no, that's my second break, and this is going to be my first break. This is going to be my first break. So that's my first break. Looking for my second break. We have about 4 minutes to the hour. All right, price pushing up again. All right, price continuing to push to the upside. If you're with me, just give me a hello in the chat box. What we're looking for right now is for price to break to the downside. We're looking for price to break to the downside. If you're with me, give me a hello in the chat box. Price still pushing up. All right, so we're going to have to wait patiently. So I'm just going to wait patiently, wait for my entry setup. We're at the zone already, so that's a good thing. I want to see the second break, and then I'm going to jump in. Getting a little bit of a pullback. Price is moving kind of slow today. You guys can see by looking at the bars, very small. So we can see price pulling back. Let's see if it breaks this current trend line. That'll be my second break, and I'll look to go short on that break. If you're with me, just say hello in the chat box. We're waiting for a break of this trend line to go short. Getting that bounce. Let's see if we're going to get that break, or if we're going to move up to the next zone. If you're with me, just give me a hello in the chat box. What we're looking for right now is a break of the trend line so that we can go short. Let's see if price respects my break and continues moving down. Got stopped out on that one. So I'm going to look to go along with this one. And my profit target would be to this zone C. Let's see if the price goes. It's going to be moving slowly. It's a slow day. It's progressive to the upside, but it's a slow day. It looks like price will be cutting through these zones. When price gets to the C zone, if price gets to the C zone, I think what I'm going to do is target the D zone instead, just in case we get a full extension today. I'm going to target the D zone, and I'm going to try to see if price is going to respect the uptrend. All right, so this is a second break here. All right, so I'm going to see if price respects this uptrend, keeps moving up. If it does the same thing that it did here at zone B, at zone C, it's going to keep moving up, most likely get to zone D. There is most likely going to be some sort of reaction. It doesn't have to be as small as this one. It could be a bigger reaction at zone C, but I'm going to try to use the trend line to help guide me. So once it gets to zone C, I'm going to put my stop in profit. Or if I see a pullback and it breaks the high, I'm going to put my stop slightly into profit. Getting a reaction. If you're with me, just give me a hello in the chat box. What we're doing today is using my liquidity map zones. So these zones are areas where price is going to be moving back to the downside, or where price is going to create a corrective formation for a continued move to the upside. So you can see here, corrective formation, continued move to the upside. Corrective formation, continued move to the upside. If we get a corrective formation here again and a continued move to the upside, we could be looking at price getting all the way up here. And I'll take my profits at this level, because generally when price gets to this level, it's going to stop or cool off. At least it would need to pull back before it goes up again. And we may not have enough time in the day for that to happen in this US session. All right, so looking good so far. This is the liquidity map. It is not a retail trading method. It is an institutional trading method. So this is not one of those methods that a lot of retail traders would know about. It's very simple, very straightforward method. So right now I'm looking for the price to hit zone C. I should have entered this one long since around this level, but I think the reason why I didn't get this long entry was because we got the first break. Where was the first break? Let me see. Why didn't I enter this one? Oh, I think this was the first break, and then this was the second. First break. Okay, I think this was the first break here. And then this was where we were supposed to get the second break, but we didn't get the second break to go short. Price went up. So we were looking for the second break. If after the second break, price goes back to the upside, then that's when we look to go long. So that's why I didn't go long on this one. So this one, I got my first break. Let me just show you guys here. Hello, hello to everyone in the room. This was the first break. First break was here. See, price came, hit that, came back. So that was the first break. And the second break was here, where price came down and then went back to the upside. And I was able to enter here when it was breaking the high. So what I'm looking for now is price to get to this C zone. When price gets to this C zone, I should exit the trade and bank that profit. However, I'm anticipating that the price will give me another one of these corrective formations and continue moving to the upside. If it does not continue to the upside, I'll try to close the trade if it breaks the trend line. Okay, so what I'm looking for now as well is price to kind of go sideways, break the high, and then I'll just move my stop into break even. Something's telling me I should move my stop into break even right now, so I'll do that. I'll do that. In case this thing pulls down aggressively, I'll be ready to get out of that trade and look for the sell side. So my stop is already moved into break even. All right, so this getting a little choppy over here. Let's see if we continue to the upside, get to the C zone without getting that stop hit. I did kind of move to break even a little earlier than I would like. Generally, I want to see this type of formation and then break out of it, then move to break even. But I'm a little concerned about taking the chance to wait and then it comes down aggressively, because we kind of still is around this B zone area, so price could still aggressively return to the downside. So it's better safe than sorry. All right, looks like we're progressing nicely to the upside, so that's good. So we got the pullback. Now we're looking to break that structure. Hopefully we break that structure to the upside and get to the C zone area. And once we get to the C zone area, if we go sideways and we continue moving up, I'll just try to keep trailing the stop up. We're still looking for the sells right now, but price is moving up. We're getting these long setups. So we're going to take the long until we see a reason for the sell. This is the 1 hour time frame. See how these 1 hour bars are kind of very bullish. So these bullish bars are telling us that price may want to continue moving up for the rest of the day. Though this bullish move is not a move that I was expecting to keep moving up for the rest of the day. If I look at it on this 1 hour time frame, this top, I actually thought that this top could have been the end of the move up, and the price pulled back. We got 1, we got 2, we got potentially this would have been 3 for price to turn and come back to the downside. But if we take out this high, then I think I'm just going to be looking forward to some more upside. It doesn't have to be perfect upside, but I'm going to be looking out for some more upside if it takes out this high. I see we have Pratt with us. Hello, Pratt. How are you doing today? Nice to have you on the live stream. So Pratt, what we're doing today is we are looking at my liquidity map. This is my trading method that I created where we look for these zones. Well, you guys won't have to look for those zones. It will be turned into an indicator soon, and you guys will be able to see these zones plot. And what you'll be doing is whenever price gets to one of these zones, you're going to be looking for this type of setup, which is a corrective formation for more upside. So you're going to look for price to break above it to go long to the next zone. When price gets to the next zone, you're going to exit your trade, bank your profits, see if it makes another corrective formation. If it breaks above, you enter to the next zone. When it gets here, you take your profits as well. Or what you can do is just allow price to just ride the trend. And when it breaks out from the trend, then you exit your trade to the upside. Okay? But it's always good to bank your profits early. So the idea is once it gets to the zone, close the trade, wait for it to make another setup. If it breaks out to the upside, trade it to the next zone. So from the C zone, the D zone is all the way up here, right? So this is where I'd like to see the price come today. If the price gets here today, that will be good. So I started off this account with a $500 balance. However, I did find myself trying to go short. I can't remember what day it was. I was trying to go short. The price did go short, but it was just dancing around for a long period of time, causing me to get stopped out a lot. So that caused my balance to go down, and eventually the price went down, and it was a bit of a disappointment that day. But what I'm doing now, when I'm looking to go short, I'm using the double trend break approach. So the first time the price hits the zone, I draw my trend line. When it breaks, I look for the pullback and I look for the second break. If it breaks the second time, then I'm out. Okay, you see right now the price is pulling back. It's pulling back. Let's see what happens if it will hit my stop. All right, so I got stopped out on that one. Price did not continue moving up. There is a possibility that price could be creating a bigger corrective formation for upside, or it could be looking to reverse, right? So what I'm going to look for is we have price moving up. This is, okay, so this is the second break, it looks like. No, this was the first break. I think this here is the second break. So let's see how price reacts at that level. If price goes back to the upside. So let me see here. First break. Just a second break here. Caught this one to the upside. And now we're pulling back. Okay, this may just be a pullback, but I'll watch it closely. We're getting a break. I'm going to take this one to go short just in case. Let me just... This could be creating a bigger corrective formation. I'll wait a little while. I'll allow it to get to this level because it could just come down here, bounce here, go back to the upside. I'll wait for it to break here. If it breaks here, I have more space in the event it wants to drop. So I'll wait for this break. This trend line is still going to be able to prop the price to the upside. So I won't just jump in. Wasn't really looking for a price to retrace this much. We're getting this type of retail price action where price comes down, finds support on this level and bounce back to the upside. So I just barely got stopped out and price continues to move to the upside. I'm not going to enter it long again. I'm going to wait. If it breaks down from this level, I'm going to sell it. It looks like it wants to go down. So there's a possibility price may have reached its max move for the day and may want to come back to the downside, which would kind of confirm that this move is what we got over here, right? We did not break this high, so it's possible it can still come back to the downside. So let's see if that's what's going to come. I'll wait for this trend break and then I'll sell off that. I'll try to find some place to put my stop, most likely above here. Don't really want to have too many big stops. Brad says, how did you consider those zones? Okay, well, it's a proprietary method, and it comes with years of experience in the market. And throughout my years being a price action expert, I started noticing how the price was moving. And I was able to come up with the distances that the price moves, but it took me a long time to put them together in a system. So over the period of the last year, I was able to put them together in a system, and I realized that what that system showed me was how the price used these distances to move and create price action. So because these distances cause the price to move in a specific way and create price action, I'm able to not get involved too much with the in-between. So I can now just look at my chart, identify one of these zones and say, okay, I know that these zones are the most highly probable areas that the price will react. So the price is either going to get to this zone and come down, or this zone and come down, or when it gets to this zone, if it does not come down, creates one of these types of formations and continues moving to the next zone. When it gets to this zone, I'm supposed to take my profit and wait to see if it starts to pull back and gives us the double breakout, or if it creates one of these to continue moving to the upside. So right now what's happened was price did continue moving to the upside. However, it stopped, did not get to this zone, and looks like it wants to reverse. So then I'm going to look at this as my first break, and I'm going to look at this as my second break. So if price comes down here, bounces, comes back to the upside, whether it breaks out but doesn't get to this zone, comes back, breaks this trend line, then I'm going to sell it. If it breaks this trend line without pulling back, I'm also going to sell it. What I would have liked to see is a pullback, then break. So we got a deep pullback. I'm not going to just try to jump into trades to go long. I need to see a proper setup with a proper breakout. Oops. All right, so right now, what is price doing? Price is, let me just ray these lines. These lines are going to help me to identify how the price is moving. All right, so this is the downtrend that the price is in currently. So if the price comes back and breaks out of this, then I know it's going back to the upside. So we are breaking down. I would like to see some sort of corrective formation, and then I look for a sell. I could go short here. That's my early entry. All right, I'm going to go short here, and I'm going to put my stop above here. Stop is kind of big, but just to make sure that I'm able to get in, because sometimes we don't get that corrective move too early. So it just broke down. It may not have given us that corrective move and then continued moving to the downside. But if I get that corrective move, then I'll add another position. Then I'll be able to trail this stop down eventually. So my profit target's going to be, oops. Profit target's going to be around here. If we're coming down, I'm looking for this level. Maybe we get the pullback. Pratt, how long have you been trading? How long have you been in the markets? Who else is with me today? This 1 hour bar over here, I would love to see this bar close red. If this bar closes as a bearish bar, it's going to give me a lot of conviction that price may want to come back to the downside. What better area to go short than at one of these liquidity zones? These are the best areas to go short. Also the best areas to look for long setups if the price is expected to trend. Okay, so Pratt says he's new. All right, wonderful, wonderful. Welcome to the markets. Yes, I do have a lot of experience in the markets. It's not necessarily an easy journey, but once you have a mentor, your journey will become easier. If you don't have a mentor, expect your journey to be very difficult. I do also have an auto trader. I can give access to the auto trader to anyone who wants to get involved with trading with me. You guys can have access to the auto trader. It's not a file that I give out. It is proprietary. So I won't give it to every single person, but I will take on a few clients with the auto trader. What it does is it's designed to be liquid. So it's liquid with price action. Wherever the price goes, it goes with it. If the price is moving up, then it's moving up. If the price is moving down, then it's going to be selling, right? So if the price is moving up, it's going to be buying. If the price is moving down, it's going to be selling. And there are certain criteria that are set to take profit. Distance, time, certain indicator settings, profit targets in terms of dollar amounts. And it also trades the most volatile part of the day, which is 8:30 to 9 and 9:30 to 10. So that's the only times that it trades. You could set it to trade anytime you want, but that's the time that I have set it to trade for that particular auto trading approach. Yes, I do provide private mentorship. I provide mentorships for different Forex companies, and I do also do private mentorships myself. You can find my email address in my About section on my page, on my YouTube channel. But here's my email address. It's phillipsfinancialtraders@gmail.com. And in my About section, you can also see that email address there. All right, so that sideways move that I was talking about, it looks like that's what's happening right now. Price is starting to go sideways. I'm looking for a nice opportunity to be able to bring my stop down, to try to bring my stop to break even. I don't have an opportunity yet. I need the price to come down, at least come down somewhere below this level. I need another corrective formation, then I can protect it into break even. Once I have another corrective formation below this one, I protect my stop right here, break even. All right, Pratt, when you email me, Pratt, we can discuss that. Just send me an email and we can discuss that. With the EA, it is expected to make between 100 to 200% within 3 to 4 months. So it all depends on how much you need, how much you got to invest. So if you can afford to have a $10,000 account, you could double that 10,000, triple that 10,000 in 3 to 4 months. Remember, past performance does not guarantee future results. Based on my own experiences, based on how I programmed the EA, I've noticed that it can do that consistently. You will have some slow days in the market. You will have some slow periods. You will have some drawdown days. But overall, it is profitable. Very profitable. Like today, the price barely moved. For example, look at this. This was the 9:30 market open. See that candle? It barely went anywhere. This was the 8:30. I look at it more like the Forex market open. As you can see, still nothing much in this period of time, right? And look at the size of this bar. We're looking for bars like this happening at 9:30 and 8:30. But right now, we're not getting bars like that at that time. And it's okay. They will come. All right, so I'm watching this trend line here, hoping that this does not become a bigger formation for upside. I would like this to be a formation for downside. So if it crosses this trend line, then that's going to signal to me that it might become a bigger corrective formation for price to continue moving up. All right, so Pratt says, can you give some idea about your trading setup? Okay, the current setup that I'm in is it's based off the liquidity zone, right? So this is my B zone, this is my A zone. When price gets to the A zone, I'm going to be looking for price to go down or for price to continue moving up. That's the two things that I'm looking for only at the zones, okay? Only at these zones am I looking for an entry. So when price gets here and I see, let me just try to draw this in here for you. Price is going, when price hits the zone, as soon as price hits the zone, I pull my trend line. So price hits the zone, we get here, see my trend, and this is where price breaks that trend line. So this would be my first break, right? I need 2 breaks to go short. So that's my first break. And then price continues going back to the upside. And this now is where price gives me a second break. So with me getting this second break, I'm looking to go short, right? So I would want to go short at that area. And if price comes back and stops me out, then I would go long. Okay, I would go long once the price comes back, stops me out, I go long. I go long to the next zone. When price gets to the next zone, I will close my trade. I will take profits. Okay, that's going to be a small trade. I take profits once price gets to this level, and I do the same thing. I draw another trend line to where price hits the zone. Right here, price hits the zone, and there is a break here. So that's my first break, and then it continues back to the upside. So this would be my second break. When price breaks the trend line here, I'm looking to go short. Okay, so I'm looking to go short here, and if I go short and the price does not continue going down, instead it turns back, breaks the high, or whatever pattern formation was created here, then I'm going to look to go long. I'm looking to go long to the next zone, which is zone C. This one, right? So I was looking to go long to zone C. I saw that price did not go to zone C. It kind of paused here. So this was my second break. And then price started moving up into this trend. It started to come down, broke down here, then broke down here. So I decided to go short, but price came back. But just to be on the safe side, I went short, put my stop above here. So in the event that this trend line that I have here for downside holds, I'm going to continue moving to the downside with the price. This would also be a nice area to go short again, because this is at the trend line. So that would be also another very good area to look to go short again. But what I want to do first is I want to protect the trade that I'm already in. So as the price comes down, if it comes down below this level, gives me another corrective formation somewhere down here, I'm going to move my stop to try to protect the investment that I already have. So over time, you're going to understand the method. Not everyone's able to understand how to trade instantly. So over time, just come by, watch, and over time you will learn. Have you had any experience trading before? Have you had any experience trading before, Pratt? Okay, Pratt says only demo trading. What methods did you trade? What types of setups did you take? Also, Pratt, when you're trading, you're going to win some, you're going to lose some. Losing is part of trading. Sometimes you have to lose a setup in order for you to be able to see the next one. And that's how I trade. Okay, right now it looks like it wants to break to the upside. It's breaking out of this trend line. Brad says learning ICT, SMC. Okay, I've heard of them. I'm going to hold on to my trade. So it broke here. No longer valid. What I'm going to do here is trend this formation. If price comes and breaks down, I'm going to add to it, because this would be a flag, which is a corrective formation for downside. Price needs to violate this high to indicate that it may want to come back and continue moving up. So I'm looking for a short. And if I catch a short here, then I can protect it right here. And if it continues moving down aggressively, kind of like this, then I'm going to be able to catch that move to the downside. And then I need to try to move to break even as quickly as I can to protect those entries, just in case this is just a big corrective formation for more upside. How much risk do I have on the table so far? I have 17. You don't want to take too much risk as well when you're trading. You need to understand the size of your account compared to the amount of trades and size of trades that you want to take, with the risk that you're taking as well. So far we look like we broke down. This still kind of looks a little fishy to me, like a corrective formation for more upside. But we broke down, so this is a nice area where I could be going short. I'm not going to take this one short just yet. I'm going to wait, because I already have risk on the table. I want to be able to protect that risk before I decide to take on any more. But it was indeed a nice setup. It's a nice setup. I can't deny. It's a nice setup. But we're still in an area where the price could go back to the upside. This entire area here could become a correction. This entire area could become a correction. 4 more downside. Once it comes and retests this low, it could still become a go back here, then go down. So there are so many variations in price action that you need to be very, very careful. The more information you have, the better you will be. But at the same time, sometimes having a lot of information could become like an information overload. So that's why it's good to have a mentor. You can just have a simple strategy with some simple rules, and you just simply stick with it. All right, Pratt says, little confused about how you get these liquidity zones. I don't tell anyone how I create the liquidity zones. The liquidity zones, it's going to become an indicator. I'm going to turn it into an indicator, which I will provide to my students. So it's designed to be software. It's going to be software. It's not a method that I teach people how to create the zones. I teach you how to trade off the zones. So you're going to have to trust your mentor. Trust the zone. All right, so I didn't take this entry to go short. Price looks like it's either pulling back or wants to go sideways for more downside. If it goes sideways, there's a possibility it comes here, bounces back to the upside before it comes down. And that means that this will start becoming a bigger corrective formation. It's going to become very messy. So it could continue moving down, but it may want to become messy before it goes down. And these are some of those types of setups that can cause a lot of traders to start entering at the wrong time. And, you know, you're entering at the right area, but because you may be placing your stops at the wrong places, you start getting stopped out. Pratt says, keep this zone secret. Yes, it's my little secret. It's my little secret. How I come up with my zones. I can create these zones for many different instruments, but it's not very simple. It's very difficult to come up with them, you know, to come up with new zones for new instruments. It's not easy, and it's very time consuming, and it does take a lot of testing. My EA, 6 years of development. My liquidity zones, they also took me a few years of development, but it's only about a year now that I was able to put them together as a system. It's like make them into like a step where you know once price gets here, this is going to happen, that's going to happen. So it took me about a year to turn it into a system. Overall price action, for example, the Elliott wave theory, I learned that over the space of about 2 years. Got very, very good at it. Mastered it actually. Harmonic patterns, mastered that as well. I actually have over 100 harmonic patterns of my own. I later discovered that harmonic patterns, the way in which they were originally taught by Scott Carney, was not exactly the most accurate. That's why a lot of traders who use harmonic patterns find themselves struggling. What harmonic patterns actually do is they create impulse waves and they create corrective waves. Most times they create corrective waves. So that's why you may see a harmonic pattern gives you a zone for the price to move down, but instead the price may go sideways for a while and then move up. That's because that harmonic pattern created a corrective formation for more upside. So if you understand the Elliott wave theory and you understand harmonic patterns, then you can bring them together and look for, the wave that you're expecting at particular harmonic levels, harmonic zone levels. So I also realize that trading has a lot to do with understanding as many methods as possible. If you really want to be a master, you need to understand as many methods as possible so that you can create something. You can create another approach, because I don't really like to downplay what anyone else sees in the market, because you as a newbie could come into the market and see something that I, as a veteran, never saw. So I can't tell you that what you saw is wrong or what you saw does not exist. The most I can do is try to understand what you saw and try to see, what's the best way to have that implemented. So what I did was bring a lot of the methods that I learned, bring them together to try to have a more holistic view of the market. And I was successful at that, having a more holistic view of the market. And then I worked on trying to simplify everything that I know in the most simple ways. And I came up with the liquidity map. So whenever price gets to one of these zones, then I look at maybe things like support and resistance. Then I look at things like the Elliott wave theory. Then I look at, you know, all the different types of methods. I start looking at them when price gets to these zones. So according to the Elliott wave theory, this would be a corrective formation, and this is a corrective formation for price to move down. Now, when it comes to the Elliott wave theory, sometimes you may see a formation and you expect the price to respect that formation and move down, but because the market makers know that's what you're looking for, they may manipulate the move. And instead of bringing the price down, they bring the price up, creating a different formation, or using one formation to extend it into another formation. See, I just basically mentioned that, and this is exactly what they're doing. Everyone saw the flag, everyone starts to sell. When everyone starts to sell, they change that flag, which is supposed to be a bearish flag for more downside. They change it, they bring the price back to this high, right? So remember I told you guys I saw this 1, 2, 3 move, which looked like a flat formation. You see the price went right back into that flat formation. Now, everyone is seeing this move up, and they're thinking to themselves that this could be the move that's going to get us to this C zone, and then they just bring it right back down, respecting this flat formation here, right? So, or making this 1, 2, 3, 4, like W, X, Y, X, Z, then still bring it back to the upside, okay? This high was not broken, so if this is 1, 2, 3 like that, and this is the highest point, the last move to the upside, then this is still going to be 1, 2, and they come down, right? But then it's still maybe limited to this level because of this corrective formation here. If price comes down, it could still be limited to this level. Then price goes back up, maybe to this level, then maybe break down. It could still come here, go back to this level, and still get to the C zone. Because if they see that a lot of traders are coming into the market to the sell side, they're going to push the price up to liquidate those sellers. The market makers move against the retail traders. That's what they do. They don't move price in your favor. They move price against you. So you need to understand that. It doesn't mean that because the price is moving up, if you look at this area here, because the price is moving up, there are more buyers. Price is moving up because there are more sellers in the market. The market makers are the ones that are pushing the price up because there are more sellers. So what they're looking for is to liquidate those sellers at these levels. So these zones will appear at areas where there is liquidity, right? So the market makers are going to move the price to these levels to create liquidity, to take that liquidity, sorry. So here they came, they took liquidity. There is more here, they come here, they take it. If there is more above here, they're going to come here and get it, right? So this move down, this sideways move created liquidity in these levels here as well. So if there is enough here, they're going to come for it. And it looks like that's what they're doing right now. They're coming for that liquidity. Those pattern traders who look at price action and say, okay, this is a shoulder, this is a head, this is another shoulder here, and they're looking to sell off this, sell this break, this is what's happening. Price is coming to stop us out because liquidity is built above these levels. See? So price came, we got stopped out, and what we can look for is price to get to this level. Now, I could decide to go long here, but there is a great possibility the price needs to come back before it goes up. It could still go up, but if you're looking at trading patterns and so on, this is the time that you would want to try to employ those skills. But for me, the manipulation that can happen at those times is not worth it. So what I would do is just let the price do its thing, wait for it to get to this zone, and then I'll look for a reason to go short. Is that clear, Pratt? See my concept? Elliott wave theory. Let me try to bring on my Epic pen. Just opening my Epic pen. Where is it? Where did it go? Where are you? Okay, found it. Okay, let me bring it over here. All right, so this is the expected formation from the Elliott wave point of view. Price gets to this level, or even if it breaks above that level, it is going to be expected to come back like that. Then do this, right? That's what is expected according to the Elliott wave theory, this pattern formation, right? This is called a running flat. It could even come down, break this low, and still go back up here, and that would be called an expanded flat formation, right? So we can understand all of that, and the market makers are going to change the movement around so much to create a whole different formation that's going to blow your mind, right? So that's why I prefer to just use my liquidity zones. So right now we hit my liquidity zone. You can see that it hit it, right? So what I would want to do in a case like that, is, okay, let me remove this. This is not valid. This is not valid. This is not valid. All right, 1 second. Okay. All right, so this is the current trend that we're in. And last touch. And this is where we went up. This is where we hit that zone. This is no longer valid. All right, so this is where we hit that zone. Let me pull this back. Good, so this is where we hit that zone, right? And I'm going to look at if price breaks out of this, that this would be my first break, right? If price breaks down here, that'll be my first break. So I'll look for my second break, right? So this would be my first break. When price comes back and breaks this high, I'll look for it to pull back to break the next trend line that will be present. It's either going to be this one or maybe another one inside here. And that will be my second break, and I'll look to go short off that. So that's how I look to go short off the liquidity zones. You can see here on the 1 hour time frame that the move up looks like it's fizzling off, right? Don't forget that there is a resistance level here. Let me just try to show you guys. See this green line? This is this high, right? So this high is basically saying that if the price comes and hits this level, then price could be opening to the upside. But this is going to be 1, this is going to be 1, 2, 3, and then potentially we get another move down, right? So this area could be an area where the price could reverse. It doesn't have to get to this area. It could reverse before, okay? Because that would make it a different type of pattern formation. So you need to understand all of that when you approach the market. So price is pulling back. Looks like we're probably going to get our first break. And then I'm going to wait for the price to bounce here, pull back, and then get my second break. On my second break, I'm going to look to go short, because this is my liquidity C zone. So far, all liquidity that was above this level, maybe most of it was taken here. See that? Stops would have been here, just where you saw my stop. That's exactly where the market makers move the price to collect that liquidity, right? So this entire area here is a liquidity zone. So I'm going to wait. I'm going to wait patiently, especially if I see a red bar, a red 1 hour bar close at around a liquidity zone, that gives me even more confirmation that price could be coming down more aggressively. Red 1 hour bars at liquidity zones, it's like yippee, hooray. So because I'm trading this on the 1 minute time frame, I could actually be getting a very early entry, which means I could be going short before the bar even turns red on the 1 hour time frame. So this gives you an opportunity to catch very, very early entries. So we have our first break already. And price is pulling back. I'm thinking that price may not be moving beyond this C zone. But guys, remember, I'm only taking my setups at my zone areas. Price needs to hit those zones before I look to go short or I look to go long. I'm not taking entries before these zones are hit. So I'm waiting patiently for my entry. Got stopped out on my second trade. So my first trade was a break even. We can look at that in here. Let me see. Okay, first trade. Give me 1 second. 1 second, my phone's ringing. All right, so I'm back. So we have the first break, price pulls back, and now we're looking for the second break. I'm going to look at this area for the second break. The second break could also look like this. See, price broke the high, so this is where the trend line is supposed to be. So this could be the second break. For an early entry, I could take this one once it breaks. So it broke. I can take this one as an early entry. Go short. I stop just above. If the price comes back, stops me out, no problem. So it barely closed, opened outside, did not even get a much of a pullback. Might have entered this one a little too early. Just a tad bit too early. Let's see if it comes back to the downside. Would have wanted to actually catch a proper break. This is not a proper break. It closed inside, opened outside. So not a proper break. So I got caught on that one. That was not a good break. Price is continuing to progress inside of this zone here. Are we getting a better break now? Looks like another corrective formation for upside. We're getting another break. Sell that. Put my stop in. So this could still pull back, because if you look at this, this is kind of flat. So this could pull back and we get stopped out on that, or this could just continue moving to the downside. So what I did was just use my 2 break for my entry to go short, and I did that. Just trading mechanically, okay? If the price comes back and takes it out, then that means that price could go a little higher. All right, so far this looks like another corrective formation for more upside. So I may get stopped out again on that one. Got stopped out on that one. I'm still not going to go long yet. I know it wants to go up, but I'm not going to go long yet. Though this would have been a lovely entry to go long. I'm not going to go long just yet. It looks like price left behind a gap here and a gap here. On the 1 hour time frame, we got to that high. So this could be one of those levels where price could be rejected to the downside. So I'm going to wait and see. So we have this one, we have these two. Looks like price really wants to go. Let's see. If we break out from this formation, we get another corrective formation, we could be going a little higher. There's also these types of trend lines and so on for channels that could also cause the price to get rejected without getting to this level. So that's why we need to use the trend breaks. So I still have these two here. See how they play out. Price is looking pretty bullish. So this area here, this was a trap. You can see that. Those who understand what a head and shoulders formation is, you can see this looks like a head and shoulders formation as clear as day, right? Very, very obvious head and shoulders formation coming up right here. And market makers pushed the price down, led you to believe that it wants to go to the downside and pushed it right back up, taking you out. I was caught up in that one too. So I'm down $38. And we're breaking out. We're still moving to the upside. Price is pretty bullish. Moving to the next zone. All right, so around this level, we have here for price to reject, and price, if price gets beyond that, we can get all the way up here. So there is, it looks like there is a lot of room for price to move up. Wow, moved out of there very fast. See the corrective formation, price breaks. That's your long right here. This would have been a nice risk to reward. Go long here, protect here. Would have been able to move into break even a long time ago as well. Missed out. So price is starting to look very bullish, and we may not have enough time for price to move back to the downside. Give me a few minutes, I'll be right back. If you're with me, just give me a hello in the chat box. Let me know that you're here with me. If you're with me, just give me a hello in the chat box. Let me know that you're here with me. What we're trading today is liquidity zones. Right now, I'm waiting patiently for price to get to the D zone. Then I'm going to look for a short off the D zone. If you're with me, just give me a hello in the chat box. Remember guys, like the video, subscribe to the channel. Let's help out the YouTube algorithm. Right now the price is going sideways. It looks like it's going sideways for more upside. Let me just use my Epic pen here. Going sideways. And this is generally a pattern for more upside. Now, if you look at this, upside, this one, I saw this one too, upside, even this one, slightly to the downside, up, this one, upside, so right now I'm expecting an up move. As you guys can see, we broke out of this C zone and it looks like we're heading to the D zone. If you're with me, just give me a hello in the chat box. Remember to like and subscribe. Everyone who stays with me on the live stream till the end gets a vacation certificate. I'm not sure if Pratt is still here with me. Had a long conversation with Pratt. We did get a setup like this before, where we got this extended move to the downside and price went back to the upside, right? Where was it? Was it here? I think this was it, and it extended and then went back to the upside. So this could be a possibility as well. This wave just becomes extended back to the upside. It got us here. We were in the long from around this level, and it started to extend, and we got stopped out at break even on that one. Then it went right back to the upside. Price is at a level where it could turn around. If the price goes sideways, if it goes sideways for a while, breaks down, could look for a short. It's already 20 minutes to 2. I want to see the price go like this. Once it hits this trend line, I can try taking a short. I can protect just above and see if it goes back to the downside. We have not hit our D zone yet. We hit our C zone. We broke out of our C zone. Price looks like it's pulling back into the C zone. It went sideways for a while, but not long enough. Just a little thing and came back. I'll wait for a bigger correction. I want something to take me back here and then go. That's what I want to see. When I enter short, I want to have something to at least protect me. So I'm either going to use a trend line to protect me, or I'm going to use a high to protect me. Right now, the high is too far away. It kind of looks like price wants to reverse, but we still have these trend lines here. So it could come down, bounce, and come right back to this level. Then we can probably break out and come down. We'll see how it plays out. This is just 1, 2, and this is 3. So even if this one becomes extended, it could still go back to the upside. So we have to be careful with it. As I tried to show you guys on this formation here, this area here, this is a flat formation that we have so far. Price went down. We get 1, 2, 3. Which is like a flat inside of a flat. And then this is a possibility we get one more down. Either this length, or it could extend like this. There's also the possibility that it reverses completely from that level and continue going down, right? Making this an AB base pattern for downside. So that is a possibility. So we're trading off the different possibilities that exist in the market. But we're only taking entries off the liquidity map zones. All right, price is breaking down, breaking down. I want to see a correction before I look to go short. It is a nice area to go short, but I want to see a correction first before I go short. See, we had corrections for upside, upside, upside. We had others here for upside, upside. This one here, upside, it's flat. But now we have another upside correction here, but it's continuing to break down, right? So I want to see a downside correction. So I want to see something that tells me the possibility of going down exists. Something like this. That's what I want to see. If I get a nice corrective formation like that, I'm going to sell it, and I'm going to try to protect maybe at the trend line, or if it's smaller, protect just above the high. But I'd like to see a bigger correction. We're back inside the C zone. So we need something bearish in the C zone. Something to say bearish. So guys, this is like an overshoot into the C zone, and it would be a wick on the higher time frames. You can see that it's just a wick. So price is rejecting that C zone aggressively, right? It went a little above it, but it's rejecting that C zone aggressively. So now we want to see maybe something like this, or downside as well. Some sort of sell signal. I don't want to enter and put my stop all the way above here, right? I don't want to have too much of a big stop. So I need a bigger pullback. If you're with me, say hello in the chat box. Remember, like and subscribe. Help out the YouTube algorithm. I'm not seeing those likes going up. So we broke out. We're waiting for a signal to go short. I want to see a bigger correction. Like and subscribe, guys. Remember to like the video, subscribe to the channel, help out the YouTube algorithm. So price is pulling back aggressively. We're getting an aggressive pullback. I want to see a correction. I'm not going to jump into it because it could start correcting at any time. Maybe to this trend line and then continue moving down. So I want to see a correction first. So I'm going to leave that drawing on the chart. Let's see if we're able to capture this short. This 1 hour bar has about 10 minutes left on it. This correction looks too deep for it to be a flat. It's flat, it would be extremely, this leg would be extremely long. They tried that over here, still brought it back. So they could probably do that again. We'll see. But we're going to enter at an area where we could protect ourselves a little better with low risk. So I would want to see it come back maybe to the trend line, to this trend line here. Then I'll try to sell it. Who's with me today? Say hello in the chat box. I had a long conversation with Pratt today. Who else is with me today? Feel free, ask your questions. What we're doing today is using the liquidity zones to enter trades to go long or short. Getting some sort of rejection at this area. Let's see if we come back to the low. Okay, we came back to the low, so that's a nice indication that we could be very bearish right now. So you want to see price go sideways. All right, guys, give me a few minutes. Be back. Okay, guys, that's it for today. I wasn't able to catch the short that I was looking for earlier, but it came a little bit later on, and I ended up not catching the first part of it. As you guys can see, it came here. I ended up not catching the first part of it, which took us down to that level. And I caught it somewhere in here to go short. See, it made this accumulation here, corrective move for downside, made another type of corrective move here. So I sold when it broke the low, and I was able to catch it down to around, I think it was this level or this level, one of them. And I got out, so I'm not going to get back in for the rest of the day. I think right now we have about 1 hour or like 50 minutes left in the trading day. So I'm just going to stop now. I'm not going to try to push anything further. It could come down more, it could go back up, pull back. I'll just leave it alone for now. I'll come back tomorrow and we'll approach this fresh. Okay, so a little drawdown today, $8.15. So I'll see you guys tomorrow. Bye bye for now.